Now let us understand profit. Profit for the purpose of value creation, for the purpose of performance evaluation, for the purpose of risk management, for the purpose of decision making, and for the purpose of strategy formulation. Now, before I start discussing this topic, I had mentioned to you as independent director, there are two things that we are primarily responsible for the business where we are there on the board of a company. The first thing is value creation. We have covered it already. The second thing, as an independent director, all of us need to be constantly aware is the risk management. Please remember this coin called sustainability of a business. This coin has got two sides. The first side is value creation, and the second side is risk management. In my experience, in my research, and in my study, there are organizations who focus on value creation for sure. Invariably, a lot of organizations ignore the risk management part of it. And when they ignore the risk management part of it, as a consequence, despite the fact that they were focusing on value creation and were doing good on that account, because they ignored the risk management, those companies closed down. And the one example that immediately comes to my mind, which I am sure all of you are also aware, is of Kodak. Kodak, once upon a time, was a market leader, was doing extremely well. As a matter of fact, the Kodak's products were synonymous of photography. But where is Kodak today? It's not in existence at all. And why did that happen? That happened because they ignored the risk management part of it. And I would urge all of you to please make a mental note and maybe note down somewhere. Whichever company on whose board you are there as an independent director, everything else is fine because everybody is going to talk about everything else. Few people will talk about risk management, and you must be one of them. As a matter of fact, like I do, the company on whose board I am, I have ensured that every board meeting we have one item in the agenda, and that is risk management of the organization. So we take a complete 360-degree view of the risk management of the entire organization. Maybe all of you can also start doing the same thing. Remember, you do not have to do the risk management of the company on whose board you are, but you have to be the catalyst to ensure that the entire organization is focused on the risk management. I can give you hundreds of examples, and I'm sure when I'm discussing it with you, many examples would come to your mind automatically as to how many organizations, despite the fact that they were doing very well, they closed down one day primarily because they did not do something about the risk management. I'm sure globally, one example that I can give you is of Barings Bank. Barings Bank was a 100 years old bank, and it got closed just in one night. And why one night? Because one rogue trader from the bank over the night kept on making transactions after transactions in the derivatives, kept on failing, and again kept on repeating in anticipating that he would make the loss. And by the time morning happened, the bank was closed. And what the bank was doing, the bank was not having the risk management. And therefore, all of you may like to make a mental note कि जिस भी कंपनी के बोर्ड पे आप जाएंगे, उस कंपनी पे आप पक्का करेंगे कि रिस्क मैनेजमेंट सबसे पहले कवर होना चाहिए, फोकस होना चाहिए. Right. So when it comes to profitability, if I was to ask you as to what is profitability, I'm sure all of you would have said profit means income minus expenses. Some of you would have said revenue minus expenses or revenue minus cost, that is profit. But let me tell you, as an independent director, we need to understand profit much deeper than the mere difference between the income minus expenses. So, how the profit can be understood? As an independent director, as a director, as the part of the top management team, how do we need to understand the profit? So, we can understand profit, number one, as gross profit. We need to understand something which is known as cost of goods sold. We need to understand something which is EBITDA, and I'm sure I'm really very happy to mention this. I have gone through the entire list of all the participants, and I'm so honored and privileged and so proud that I'm delivering this session, because the list of participants that I have is so impressive. And judging your role from that list of the participants, I'm sure this term called EBITDA, all of you must have heard of in last 5-10 years at least 10-15,000 times. So what is EBITDA? We need to understand. And what is the significance of EBITDA? What is the importance of EBITDA? Why is that when Mr. Gautam Adani is purchasing a company, he is looking at the EBITDA? Why is that when Mr. Lakshminivas Mittal, when he acquires a company anywhere in the world, their focus is always on EBITDA? So what is EBITDA? We need to understand, not only in terms of as to how do we derive EBITDA, but we also need to understand EBITDA as to what is its significance. What is its significance with regard to the borrowing of a company? What is its significance with regard to the valuation of the company? And what is its significance with regard to the future growth of the company? And that is what we need to understand. And of course, we will understand it together. We also need to know what is EBITDA cost. We need to understand what is EBIT. EBIT is earning before interest and tax. EBIT is also known as operating profit. EBITDA is also known as cash operating profit. And why EBITDA is known as cash operating profit, we will understand. But at this juncture, let us become familiar with all these terms. So this is your EBIT, operating profit. And then you have something which is known as EBT and EI, that is earning before tax and extraordinary items. What these extraordinary items are, we will understand. Now, while I'm discussing all these terms with you, friends, let me tell you, as I said earlier, for us, what is important? For us, it is not important that we should become an expert in finance. That, of course, we will become. Once we start delving into it, once we start thinking about it, once we start looking into it, all of us, without any exception, will become a financial expert for sure, because it's not a big deal. But more than that, as an independent director, what we need to understand of finance, we need to understand of finance so that we are able to raise right kind of questions when we are sitting in a board meeting. So in case if you are a member of the audit committee, or in any case you are a member of the board. So when the board meeting is happening and the CFO of the company is presenting the budget for the next year, as the independent director with your understanding of finance, you should be able to raise right kind of questions. So if you have an understanding of all these terms that I am talking about, you would be able to raise right kind of questions. You would be able to ask how much is the EBITDA that we are going to earn in next year? How are we going to use it? So when you understand this and you start asking these kind of questions, my experience tells me you start automatically gaining credibility on the board of that company, acceptability on that board of that company, realization by the other board members, value that you are bringing to the board of the company. And from that perspective, we need to be aware of all these terms. So then you got a EBT, earning before tax, and so many things. Now what we do, we will understand all these terms together one by one, including what is earning after tax and so on and so forth. Now before I start discussing all these terms with the help of a case study, in case if you have any doubt, any question, please go ahead and I would be happy to take your question, take your doubt at this juncture.